Welcome into another Tax Talker. We are right on the cusp of filing season. The IRS has announced that Monday, January 26th, electronic filing will open for individual tax returns. Today, I want to get you ready for filing by breaking down one of the biggest parts of the new tax law from July: no tax on overtime. We'll talk about what counts as overtime, who's eligible, and how to calculate it for your tax return. Let's get into it. First, let's get the core concept right. This is a federal income tax deduction on qualified overtime for tax year 2025, and the deduction will continue for tax years 26, 27, and 28. This is a deduction, meaning a subtraction from income reflected on your tax return. That means your W-2 is coming to you like normal. It's going to include your overtime along with all the rest of your wages like any other tax year. If you qualify, you will be able to subtract the qualified overtime portion on your tax return. And the portion that qualifies for an income tax subtraction is the premium you were paid. It's not the full hour overtime, it's only the extra you were paid as a result of that being overtime. If you're a $20 an hour employee who gets paid time and a half for overtime, that means you would work for an overtime hour at a $30 wage. $10 of that would be the premium you were paid. That would be the part that is eligible for the income tax deduction. The total deduction, the maximum amount you could subtract on your tax return, is $12,500 for single or $25,000 for a married couple. Qualified overtime also must be overtime required by federal law. That means it's specifically required under the Fair Labor Standards Act. On your tax return, you will not need to itemize your deductions in order to claim this, but there are income phaseouts to pay attention to. For a single filer, the phaseout starts at $150,000 of adjusted gross income, and it will phase out completely at $275,000 of adjusted gross income. So if you're over the $275,000, nothing. For a married couple, the phase outs are double that. They're $300,000. They start and phased out at $550,000 of income. So pay attention to those caps, because a lot of times in the news you hear the phase outs at the 150, 300. But if you're over that, you don't want to just think, oh, it's not worth calculating. That's not true. You should still figure out what your overtime pay is and let the software calculate it. These are very broad phase out ranges, and you could still get some benefit, just not the full benefit, if you're in an income phase out range. Now let's talk about the calculation, the actual overtime pay, because this is the key thing that taxpayers are going to have to deal with to get their tax returns correct for 2025. Employers are not required to report overtime on the W-2. There's not a box for it, and there's no requirement for supplemental reporting to employees for 2025. This will come for 2026 and beyond, but this year there's nothing like that. Some employers may voluntarily provide this information in box 14 of the W-2 or as a supplemental statement. But you also need to be clear, are they providing you with all of your overtime, or are they actually reporting to you the qualified overtime portion, meaning the premium you were paid? So you gotta be careful on what exactly they're giving you. If you're not sure what number they've given you, or they haven't given you anything, you're gonna need to rely on your pay stub. For this first year, 2025, the IRS has granted transitional relief, meaning it is appropriate for you to use an estimate to come up with that qualified overtime portion. So what does this mean in practice? Well, if you go look at your year-end pay stub, it'll have your wages for that period, but it'll also have a year-to-date column where it shows you your total overtime for the year. In practical terms, for a time and a half employee, they can take 1/3 of the total overtime wages shown on their pay stub. That would be a reasonable estimate of their qualified overtime compensation for the year. One other piece to keep in mind is many states don't automatically conform to the federal tax laws. Some do, but many won't. They either won't comply, in which case your overtime will be taxable in the state, or they may need to pass a law to conform to federal tax law on this point. But it's something to be mindful of. Google your state, that'll give you an idea of where it's at. That is the Tax Talker for today. No tax on overtime. Remember, it's just the premium paid for the hour, not the full hour of wage. And you may need to do this calculation yourself for this first year of the law. If you have other questions, drop those in the comments, whether it's on overtime or anything else in tax law. Like, subscribe. We'll be coming out with a lot more videos on tax season. Thanks for watching. We'll see you next time.